Welcome to SMC Foundations, Think Like Institutions. This is not a strategy series. This is not about entries. This playlist is designed to remove retail thinking and replace it with institutional decision logic. All right, let's get right into it. We're going to tackle one of the most widespread and, frankly, one of the most expensive beliefs in all of trading. The idea that a break of structure is your green light, that it's the starting gun for your opportunity. You know the feeling. Price starts moving, a level breaks, and that voice in your head just starts screaming, "It broke, it's moving, I'm gonna be late if I don't get in right now." It's that jolt of adrenaline, that pure fear of missing out. Let's just be brutally honest about this. That impulse, that feeling, it is not a pathway to success. Acting on that belief is a pre-programmed, guaranteed route to failure. It's a trap, and today we're gonna take it apart piece by piece. Think about it like this. By the time that structure has clearly and visibly broken on your chart, the primary move has already happened. The real force is already spent. So when you enter there, you're late to the party. You're not controlling risk. You're inheriting the risk of everyone who got in before you. So if a break of structure isn't an entry signal, then what is it? Well, this is where we need to completely reframe how we look at the chart. We have to stop reacting like a retail trader and start interpreting it like an institution. And here's the new definition. I want you to burn this into your mind. Structure is not a map of where opportunity is. Structure is a visual record of who has already failed. It's the footprint left behind showing you exactly who was trapped and forced out of their positions. A break of structure doesn't just happen. It's engineered. It's caused. For a high to get broken, sellers have to be squeezed and trapped first. For a low to get taken out, buyers have to be stopped out. The trap is the cause. The break you see on your chart is just the effect. This really lays out the two different worlds. The retail trader sees the break and reacts. They see an opportunity and they're chasing the effect. The institution, they caused the break. For them, it's not an opportunity. It's a confirmation that their plan worked. They acted on the cause. Now, to make this crystal clear, we're going to sit on one single chart. We're going to watch the exact same price action play out twice. First, we're going to look at it through the narrow, flawed lens of a retail trader who's just chasing that break. And there it is. Price aggressively punches right through the prior high. The candle looks strong, your alerts are ringing, a clean break of structure is confirmed. In this moment, this is the only thing the retail trader is focused on. And right on cue, that impulse kicks in. The FOMO takes over. The brain isn't asking, why did this happen? It's just screaming, I need to get in. So a market buy order gets placed, right there at the top, chasing that momentum. And what happens next? Almost immediately, the move stalls. It sputters, and then it reverses. Why? Because the move was already over. The fuel that created that push, the trapped traders, was used up before the break. By chasing it, you just entered at the point of exhaustion, and now you're sitting in immediate drawdown. Okay, now let's hit the rewind button. We're watching that exact same piece of price action again. But this time, we're going to pull back the curtain and see the institutional context. We're going to see the cause, not just the flashy effect. So before that high was ever in danger of breaking, look what happened first, way down here. Price took a sharp dip below a previous low. Now, that wasn't a random move. That was a calculated liquidity sweep, designed specifically to stop out early buyers and to trick sellers into thinking the market was heading down. And that's the connection. All those stop losses that got hit from the buyers combined with all the new sell orders from the traders who got baited, that becomes the rocket fuel. That liquidity is what powered the explosive move that ultimately caused the break of structure you chased earlier. So you see, that break of structure was never your invitation to get in. It was the fireworks display at the end of the institutional setup. It's their final confirmation that the plan was successful. It marks the end of their accumulation, not the beginning of your trade. So how do we make sure we never fall for this trap again? It's simple. We install a new decision filter in our brain. A hard stop rule, a non-negotiable step you have to take before you ever even consider trading based on structure. This is it. This is the question. And it's the only one that matters in this situation. Before you think about hitting that button on a structural break, you must force yourself to look back on the chart and answer this one simple question. Here is your new logic, your new operating system. Step 1, you identify the break of structure. Fine. Step 2, your immediate job is to look left. Look before the break happened. Was an opposing low swept before this high broke? If the answer is no, then step 3 is absolute. There is no trade. You close the chart, you walk away. Period. And this right here says it all. I want you to memorize this. If you look at a chart and you cannot point to the liquidity that fueled the move, then it means you are the liquidity. Your stop loss is the fuel. Let this become your new mantra. Structure is a lagging indicator. It's the evidence left behind that control has already been established. Structure confirms control. It never, ever creates it. And that's the bottom line. Burn this equation into your mind. A break of structure does not and will never equal an entry signal. It is a piece of information, a confirmation, but it is not the signal to act. This course is built to correct execution mistakes, not to entertain. If this video removed a false belief for you, support the course, like the video, share it with another trader who keeps buying higher highs, and subscribe so you don't miss the required next lesson. This is SMC Foundations. Think like institutions. We build context first,